Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about 5 Point Holdings Llc annual report. 5 Point Holdings Llc offers a diverse range of businesses and services through its three operating segments: Valencia, San Francisco, and Great Park. The company provides development management services to homebuilders, commercial developers, and buyers by selling residential and commercial land sites. In addition to land sales, 5 Point Holdings operates and owns various properties, including commercial offices, research and development facilities, medical campuses, and other commercial spaces. This indicates that the company is involved in property ownership and management, catering to a variety of industries and sectors. The company's services also extend to providing general development and property management services, which suggests that 5 Point Holdings offers a comprehensive range of solutions for its clients. Overall, the company's business model appears to be centered around developing and managing mixed-use planned communities in key California locations. Der Aktienkurs von 5 Point Holdings LLC hat in den Vergingen in 12 Monaten kein significant Veränderungen aufgewiesen. Zwar hat der Kurs zwischen einem Tiefsten von $458 und einem Höchsten von $664 geschwenkt, was einer Veränderung von fast 45% entspricht. Dies liegt jedoch über der Grenze von 168%, die als significant angesehen wird. Einige wichtige Ereignis haben sich im letzten Jahr ereignet, die den Kontext für die Aktienkursentwicklung des Unternehmens geprägt haben. Dazu gehören die Übernahme von Hearthstone Venture, die Ergebnis für das Quartal und des Geschäftsjahr 2025, Landverkauf, der Schuldendienst und Kreditfazilität, Entwicklungs- und Genehmigungsmeilenstein sowie ein Managementwechsel. Obwohl dies Ereignis den Aktienkurs beeinflusst haben, ist es schwierig, Nachrichten Ereignis zu identifizieren, die explizit zu keiner signifikanten Veränderung des Aktienkurses geführt haben. Der Kurs hat in diesem Zeitraum eine Volatilität gezeigt, die diesen Schwellenwert überschreitet. Daher kann nicht von Ereignissen gesprochen werden, die keine signifikanten Veränderungen verursachten. 5 Point Holdings LLC market capitalization of $1 billion is significantly larger than the average industry peer of roughly $0 billion. This shows that 5 Point Holdings LLC holds a significant advantage in their industry. 5 Point Holdings LLC trades at a lower price-to-earnings ratio of 6 times and a lower price-to-book ratio of 0.46 times relative within the industry. This makes the stock appear attractively priced. However, the broader industry is also trading at low valuation levels, suggesting sector-wide pessimism rather than the company-specific undervaluation. Further evaluation is required to identify if the company worthy of investment, or could it be an extended period of low valuation or a value trap. The balance sheet appears very conservative, with liabilities representing only 29% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have declined over the past 5 years, indicating improving balance sheet discipline and reduced financial risk. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Additionally, special charges appear non-recurring, suggesting high earnings quality and strong financial resilience. The primary drivers of revenue growth in a company can be attributed to several key factors. Firstly, an increase in land sales revenue can significantly contribute to overall revenue growth. This was evident in 2025, when land sales revenue increased by $212,853 compared to the previous year. Additionally, incentive compensation payments from Great Park Venture also played a crucial role in driving revenue growth, with an increase of $18.9 million in 2025. Another significant factor contributing to revenue growth is management services revenue. In this case, A&R DMA's management services revenue increased by $6.5 million in 2025 compared to the previous year. This demonstrates that a company's ability to provide valuable services can lead to substantial revenue growth. On the other hand, revenue decline can be attributed to various factors as well. The Great Park segment experienced a significant decline of $42.5 million in 2025 due to the removal of operating results and balances. Furthermore, fluctuations in interest income may also lead to potential revenue decline, as seen in the San Francisco segment. In conclusion, revenue growth or decline is primarily driven by factors such as land sales revenue, incentive compensation payments, management services revenue, and interest income. Understanding these drivers can help companies identify areas for improvement and make informed decisions to drive revenue growth. The net income and profit margins of the company underwent significant fluctuations over the years. In some periods, such as 2024 to 2025, net income decreased due to various factors including title defects, inflation, and increased costs. This led to a decrease in profit margins by 92% during the same period. However, in other periods like 2023 to 2024, net income increased due to strong operational performance and growth strategy execution. The changes in net income and profit margins can be attributed to various factors such as changes in estimated total revenues and costs, inflation, fluctuations in real estate values, write-downs of assets, impairment of assets, acquisitions, and changes in revenue recognition policies. Despite the fluctuations, the company's ability to adapt and execute its growth strategy has led to some periods of increased net income and profit margins. The data suggests that the company's performance is sensitive to external factors such as inflation and real estate market fluctuations. However, with strong operational performance and effective execution of its growth strategy, the company can experience significant increases in net income and profit margins. The company's financial performance has shown a consistent trend of generating positive operating cash flow over the past few years. According to the data provided, in both 2025 and 2024, the company was able to generate positive operating cash flow. This trend continued into 2023, with the company maintaining its ability to produce positive operating cash flow. The explicit statement on page 112 further reinforces this conclusion, stating that operating cash flow is indeed positive for all 3 years. The specific amounts provided in this section demonstrate a clear and consistent pattern of positive operating cash flow, indicating that the company's financial health is stable and robust. The company's debt level has undergone significant changes over the past few years. Initially, the total indebtedness as of December 31, 2025, was reported to be $450 million, an increase from previous periods. However, this was followed by a reduction of $75 million in 2025. Furthermore, notes payable, net decreased from $525,737 in 2024 to $443,348 in 2025. Additionally, total liabilities decreased by $106,342,000 from 2024 to 2025. Despite these decreases, the company issued new debt worth $1,030 million in 2025 through the issuance of 2030 notes. This increase was partially offset by a decrease in consolidated cash and cash equivalents by $5.4 million from 2024 to 2025. Overall, while there were fluctuations in the company's debt level, it is clear that the total liabilities decreased significantly from $282,277 in 2024 to $175,935 in 2025. In terms of interest expenses, there was a significant increase from $0 in 2023 and 2024 to $1,819 in 2025. However, this was followed by a decrease to $52.9 million in 2025 after increasing to $58.4 million in 2024. The cash paid for interest also decreased significantly from $54,091,000 in 2024 to $47,445,000 in 2025. The management of the company is optimistic about its future prospects, as evident from their renewed development management agreements through 2026. This indicates a commitment to long-term growth and investment in the company's communities. The focus on managing costs, including SG&A and management services costs, suggests that the company is taking steps to optimize its financial performance. The company's strategy also appears to be centered around leveraging public financing reimbursements for public infrastructure development costs. This approach allows the company to reduce its upfront expenses and allocate resources more efficiently. Additionally, the decision to refinance existing senior notes with new ones demonstrates a proactive approach to managing the company's capital structure. While the company's outlook and strategy are not explicitly stated in a single section or quote, these points collectively suggest that management is prioritizing long-term growth, cost optimization, and strategic financial planning. The company has made significant acquisitions over the years, expanding its portfolio and increasing revenue. Notable acquisitions include Newhall Land and Farming in 2009, San Francisco Venture in May 2016, and Valencia, a 15,000-acre property, also acquired in 2016. The company further expanded its presence with the acquisition of Candlestick and the San Francisco Shipyard, totaling 800 acres. In July 2025, the company made several key acquisitions, including the Hearthstone Venture, which added $11.8 million to management fee revenue and $3.9 million in net income. Additionally, 5 Point Office Venture Holdings Llc, the gateway commercial venture, was acquired by a controlling financial interest on July 31, 2025. The company has also made strategic divestitures, including the sale of 13.8 acres of commercial land at Valencia for $42.5 million in 2025. Furthermore, the company delayed residential land sales to optimize land values and align sales with market conditions. The company's financial history reveals a lack of dividend payments. According to various sections in the document, there is no record of any distributions being made as dividends for U.S. federal income tax purposes. Furthermore, it is explicitly stated that no distributions have been declared or paid since the company's formation. Additionally, specific years such as 2025, 2024, and 2023 show no declaration of dividends. This information suggests that the company has not engaged in dividend payments to its shareholders. Concerns about inventory buildup or supply chain disruption are evident in various sections of the extracted summaries. On page 62, it is explicitly stated that there are concerns about inventory buildup. Similarly, on pages 69 and 82, inventory buildup concerns are highlighted for specific segments such as San Francisco Venture and FPLP and FPL. Furthermore, on page 86, inventory buildup or supply chain disruption concerns are mentioned for each segment: Valencia, San Francisco, and Great Park Venture. Additionally, on page 112, it is noted that there are concerns about inventory buildup or supply chain disruption due to a decrease in land under development and accounts payable and other liabilities. However, not all sections of the summaries indicate concerns about inventory buildup or supply chain disruption. On pages 15, 18, 20, 23, 25, 35, 37, 40, 41, 53, 55, 60, 61, 67, 71, 84, 87, and 117, there is no mention of inventory buildup or supply chain disruption. That concludes the financial summary for 5 Point Holdings Llc. Feel free to comment below, and I will be happy to answer them when possible.